Okay, good afternoon, everyone, and thank you for dialing into this afternoon's webinar, which is on excess of loss. My name's Heidi Buckingham, and I work in the sales and distribution team here at Zurich, and I'm joined by our presenters this afternoon, Desta Henry, Liam McGreevy, and Matthew Summers, who work in our excess of loss team. Just a couple of housekeeping bits and pieces before we get going. So the webinar is being recorded. We'll send around a copy of the recording and a copy of the slides that we go through afterwards. Please feel free to send that on to any colleagues who you think might be interested in listening to what we talk about this afternoon. I'll also send around a feedback survey, which we'd be really grateful if you could fill in, especially on any topics you would like us to cover in the future. Hopefully everyone can hear me okay and can see the slides okay. If not, drop a message in the chat, or hopefully it will be all right on the recording afterwards if there's any kind of localized tech issues. Feel free to pop any questions that you've got in the Q&A box throughout the session, and we will answer those at the end as well. And with that, I think I'm handing over to Desta to kick off. Thank you.
Thank you, Heidi. And again, thank you and welcome for joining us this afternoon. Well, first of all, we'll go through a bit of an agenda, just so you know what we're going to cover off for today. If you're okay to hit the next slide, please, Matt. Thank you. So we'll start with some introductions and just get to know a bit about ourselves. First, then secondly, what excess of loss is, what it's all about, why is it that excess of loss is purchased. Moving on, we'll cover current market trends and what you all might be seeing and what we tend to see the reasons as to why excess of loss is purchased. Then we'll touch on some claims examples, and then moving on to Zurich excess of loss, what our proposition and what the product's all about. Then lastly, we'll close through with some questions. So if you have any, then please by all means use the chat function and then we'll answer those at the end if we have time. So like I said, we'll start with some introductions. My name's Desta Henry. I'm one of the lead XOL underwriters in the SME Centre. I've been working here for just over 12 months now, but have about 17 years or so experience in the insurance industry. Prior to moving to Zurich, I was an SME portfolio solutions underwriter for commercial combined and package, but majority of my experience has come from the liabilities side, and have been writing excess of loss insurance for almost 10 years now, I would say. So I like to think I have a lot of experience and knowledge in that department. So then we'll move on to Liam now just to introduce himself.
Liam, you're on mute.
Sorry. Hi, I'm Liam McGreevy. I've spent 12 years at Zurich. I spent the first 7 years as a senior claims handler dealing with high value personal injury claims. And then around 5 years ago, I moved over to underwriting. I've got experience in our CCI, shop, property owners and trades and professions. And as Desta said, I am working alongside her as a lead excess of loss underwriter.
Hi all, my name's Matthew, or Matt Summers. I am about, I think, 11 years into my career at Zurich. I've had various roles as trading and market underwriter in the branch. And in my current role as a senior technical underwriter, I look after excess of loss from a product and technical underwriting aspect.
Thank you. And then I think it's over to you now, Liam, just to go through what excess of loss is.
Yeah, so just going to start with the basics, which I think will just be a refresher to all of you. So what is excess of loss? So insurers will typically provide policies as standard limits. So you'll get your EL at 10 million, your public and products at 5, and your motor liability at 5. And then excess liability enables you to purchase increased limits of liability to protect against large severity losses and catastrophic events. And we'll just have a look at how that works with a bit of a diagram. So as you'll see in this, if it's public liability, for example, a client might require 25 million. There'll be the first primary layer of 5 million, and then the client will be looking to purchase 20 million above that. Obviously, there'll be situations where no insurer will be willing to give 20 million capacity on top of 5 million. So then there's options of, you know, purchasing layers such as a further 10 million on top of the 5, and then, you know, 10 million on top of that, giving the total limit of 25 million. We often refer to it internally as a liability trifle. So the jelly layer at the bottom would be the primary 5. The biscuit layer above that would be a further 5 or 10 million. The strawberry would again be a further layer, and the cream at the top of that, you know, giving the total limit that the client requires.
Thank you, Liam. So we've seen what excess of loss insurance is. So now we need to look at the common reasons as to why customers might select excess of loss insurance or might need it. So brokers and clients will tend to look to purchase excess of loss insurance for a number of different reasons. So the first one being, probably in the main, is that the primary insurers is unwilling or unable to provide the limit. There may be exposures where the primary insurer chooses to provide a lower standard limit of indemnity, and examples of that could be from where there's heat work potentially, or US exports that they're not too keen on. Another issue is that they don't have the capacity, or there's reinsurance restrictions, which therefore means they're not able to do that. Moving on to another reason would be the spread of the risk. A broker or client may feel nervous about placing all their insurance with one particular insurer. So in a way to protect themselves, they'll instead choose to purchase a number of different excess of loss, or purchase different layers in order to spread the risk and protect the book. Another reason could be contractual requirement. So another reason why we would see excess of loss purchase is because it's a contract requirement. So you could have a contractor that needs to work for the local authority, and they insist that they carry, instead of it being a standard 5 million, they might need 10. So that's when they need to reach out and purchase an additional layer. It could also just be that they're working with different contractors or larger trading organisations, which mean that they need an excess layer as well. And then lastly, it could be balance sheet protection. A broker or client may decide that in view of the particular exposures to their business that they're facing, so that again, that could be heat work, North America exposure, or even just accumulation limits, that there is a need for significant limits of liability. And again, it could be a requirement of the shareholders or lenders as well, again, to protect the book. And I should have mentioned during the intro bit that there's a little bit of audience participation, because we're just wanting to know from yourselves what you might be seeing in the market and what the current trends are. It'd be great to have some insight from yourselves as to what you're seeing and the reasons why the customers are coming to you to get excess of loss insurance. So if you've got a minute and don't mind just putting some reasons in the chat box, and then we can see what's coming up and discuss those. We'll just give you a minute to do that, and then we'll pick out some of the answers that we see coming across. Thank you for that, appreciated. So it does look like in the majority of instances, if what we can see from the chat is that it is contractual requirements that are in the main prompting excess of loss to be purchased. Another reasons that I could see was inflation, which is definitely the hot topic at the moment, isn't it? You've got the bank requirements, accumulation limits, products exposure. Yeah, the primary is often not keen on that, so that's why the increased limits are needed. And then also personal injury awards, which is, I think, what we'll touch on as again during our presentation, but also what we mentioned previously. So it's good to see that we're sort of thinking on the right lines in terms of that's the reason why excess of loss is required. So many thanks for that. Thank you. Yeah, so claims cost increasing, insurers restricting the primary liability limits, customer contracts, third parties requesting high limits. Thank you very much. Oh, someone just popped in reduced limits in the food sector. So yeah, it's pretty much spot on. Is sort of where we were thinking that the reasons why excess of loss is required. And here's just an example here in terms of the rising cost of claims costs. There's a recent case of Blair versus JBAD 2023, so a county court award an uplift of 12% in respect of general damages to relatively modest motor injury claims. Sorry, get my words out. Citing the current economic circumstances as justification for increasing the figures recommended for such injuries by the Judicial College guidelines. So claimant law firms are now beginning to take a note of the judgment and obviously need to factor that into the claims cost as well. Thank you.
So we're going to talk through a couple of claims examples just to bring some of this to life. And some of these scenarios basically demonstrate where high limits of liability can be necessary. The examples that we're going to talk through, they're market losses, which have included a number of different insurers. We've left out a little bit of specific detail just so that they can't be identified. So the first one that we're going to talk through is a construction sector example. Now, unfortunately, we're probably all used to seeing large or catastrophic fire events in the news, and often these fires are caused by third-party contractors working on the site and often also including the use of heat. So the first case study is an example of this. It's a project policy that insured the employer and the main contractor for the design, the construction, the redevelopment and refurbishment of a large hotel. So part of the works included the installation of a live green wall. A total limit of £200 million was purchased for this, so fairly unique in terms of the size of the cover that was needed, and that was really just representing the size of the contract, but also the property as well. Now, unfortunately, a fire occurred on site. It's believed to be caused by sparks from welding activities and the use of flammable material in the green wall. The potential loss for this claim has been indicated in the region of £100 million, and that includes damage to the hotel, clean-up, rebuild of damaged property, and also loss of revenue. So whilst not a typical example of a claim because of the size, the scenario is unfortunately relatively, we see relatively frequently in the market. And it's a good example of why customers should consider purchasing those higher limits of indemnity. So the second example we're going to look at is a products liability case. Now, in this case, the insured was a leading manufacturer of food products. One of their products included Worcester sauce, which is a product really that's incorporated into many other food items. A batch of the sauces was found to be contaminated with a dye, which was alleged to have carcinogenic properties. Unfortunately, that's caused significant damage. It's led to large product withdrawal costs and also resultant losses throughout the supply chain. In this example, the claim exceeded £10 million and impacted more than one policy year. The reason why you see a picture of a pizza there, typical example of a product that the Worcester sauce may have gone into. So you can think about the widespread nature of that product item. Again, a good example really of what you may consider to be actually a low risk product here, but actually having a large impact and potential for quite significant losses. So we're now just going to talk a little bit around Zurich's excess of loss solutions. So we're seeing significant growth in the excess of loss space, and we've fast become one of the leading UK excess of loss insurers. Building on our global, regional, mid-market trading and our e-trade offering, and also delivering the expertise that you'd expect from Zurich. So we're going to focus this afternoon on our e-trade product today. The reason we want to do that is because it is the quickest and the easiest way to obtain an excess of loss quote from Zurich. And we've also just recently refreshed this product and taken it to a full market launch. So as I mentioned, we understand speed is key with excess of loss. Again, the quickest and easiest way to obtain an excess of loss quote for ELPL or third-party motor property damage is via our e-trade product. We offer a competitively priced product, and access can be obtained through Zurich Online, Extranet, and also through Actress software. The product offers underwriters to provide flexible solutions, multiple structures and attachment points. We can cater for small as well as large customers, even all the way up to customers with a turnover of £100 million. Our documentation is clear, it's easy to understand, and is available as soon as the quote or the policy is issued. And finally, we have a strong underwriting strategy with clarity in our appetite, and we'll talk a little bit on that in the coming slides. So just picking up on a couple of the points that I've mentioned there in the previous slide. So in terms of the product, we can provide flexible solutions with excess EL typically attaching at 10 million or above. For PL and products typically attaching at 2 million or above. And in respect of excess motor third-party property damage liability, we typically attach at £5 million or above. We would generally only write excess motor third-party property damage in conjunction with excess public and products liability insurance. What's great about the e-trade product is that we can attach at the first layer above the primary limit, or even the second layer and above, so we can come in at various different attachment points. In terms of our cover, it's on a follow form basis, meaning that we provide cover in accordance with the terms and the conditions of the primary policy, subject to premium limits or terms and conditions. So as I mentioned, we're going to have a little look at our appetite.
So as we've touched on our strong underwriting strategy and appetite, we have a wide risk appetite over a broad range of sectors, including construction, engineering, manufacturing, logistics, wholesale and retail, and professional business services. As you can see from the chart on the right, 86% of our trades are accept, with under 10% being decline and 6% being refer. So it just sort of shows our willingness to write the business, and we just want to encourage you really to, submit quotes over to us. We're happy to have discussions, whether that be sort of on the phone or live chat, or if you just want to reach out to discuss a risk, we are here to sort of write your business.
But then lastly, we just touch a little bit on our approach to service. So using our e-trade product, as Matt said, is the quickest and easiest way to obtain an excess of loss quote from Zurich. We know that excess of loss is often the last piece of the puzzle. We do get those last minute inquiries. So we know that the speed is key and that it's essential that we try and turn it around as quickly as possible. We do have a dedicated and experienced, experienced and dedicated members of the team. We've got about 15 underwriters in total, spread across Leeds, Birmingham and Cardiff. So this means that we're able to respond to 50% of referrals within 60 minutes. So you can see that we've got a wide range of experience from 5 to 35 years. So I hope that gives you some comfort in knowing that, like I said, we've got experienced members of the team to be able to deal with any inquiries. You can contact the team via the phone or using the live chat service, which seems to be quite popular, as that usually typically takes less than about 90 seconds to reach an underwriter. And we know that the live chat function is like quite easy to use, and it is underwriters that are sat at the other end willing to take that up there to take your inquiries. And in the first instance, we will try and deal with it there and then, but you're going to have instances where we do need to take it offline and review the risk in a little bit more detail if it is a complex risk. So we know that it's not always going to be straightforward, so that's why we have access to technical and product underwriting, as well as our risk engineering team, meaning we have the capability to write the more complex cases, and we want to see those complex cases as well, because like we said, we're here to write. We can do the higher limits, we can do the turnovers up to 100 million. So we just ask that you, in the first instance, try and give us as much information as possible, because then we can then try and move the query on. Or if it's easier to chat through, then by all means, please pick up the phone and have a chat to us about anything that you feel is probably worthwhile chatting through, rather than just sending the referral in the first instance. So I think that maybe brings us to some Q&A, if there's any. Oh, sorry, next steps. Is that Q&A? Next steps, what we're doing?
Yeah, just some next steps before I move on to the Q&A. So we do have some marketing material we can send around. If anyone wants to see that, if you just reach out to your local Zurich representative. Also, we're happy to have sort of calls or in-person meetings to talk through our appetite. Provide extranet demonstrations for non-Actress users, and again, if you just reach out to your local sales representative, they'll be happy to arrange that. And as you can see at the bottom there's just some contact numbers for us. So there's a contact number for our specialist underwriting team who do the excess of loss work, and if you have any system issues on Zurich Online, there's a contact there for our e-trade team. And obviously, Desta mentioned, if you want to contact us via live chat, also, gets really positive reviews on live chat, our excess of loss service. I think now we're ready to move on to questions.
Perfect, thank you, Desta, Matt and Liam. So if anyone's got any questions, please feel free to put them in the Q&A box or the chat box. I've seen we've got a couple already, so let's start with, is excess of loss only for liability risks, or will it cover other types of excess of loss, such as business interruption, policyholder owned damage, where the primary insurer may be unwilling to underwrite higher limits?
Who wants to take that?
So it's just for liabilities. Yeah, unfortunately, the product doesn't have the capability to write any other lines at this, well, let's say at this moment in time, but yeah, we are where we are. It's just liabilities only at the moment.
Yeah, so this product specifically is excess liability, I guess, and you are talking to 3 casualty underwriters with some property experience, but also within the property arena, it may be appropriate to have like a lead and follow structure or a co-insurance approach. But specifically, this product is around excess casualty. Yeah.
Thanks, Matt and Desta. Adrian has asked, which trades are declines?
I couldn't give you the full list of declines, but one sort of sector we don't really write much is in motor. So things like vehicle repairers, body shops, things like that. We were previously offering quotes, but sort of restricting cover with endorsements. And we had some feedback that really, there's quotes where we weren't sort of much use because it was restricting the cover that clients needed. So we have sort of move them trades to decline. I'm not sure if there's any other areas, Desta, that you can think.
So you've got stuff like aircrew. Obviously, we're not really interested from an accumulation aspect to write that type of business. Flat roofing, again, we're not necessarily overly keen on anything to do with that as well. But in the majority of cases where it does refer, it's probably useful to know that it's referring for a reason and that we will try and accommodate it where we can. So by all means, just because you see it's referred doesn't mean that we don't want to write it. We want to see if does it mean that we write a different structure? Does it mean that we just want to know a bit more about it because it's complex? Because a lot of the time what you'll find is sometimes is excluded in the statement of fact, but it could just be something as innocuous as somebody doing some electrical work, at the train station, but they're not actually doing anything in terms of rail. So like I say, the majority are the ones that are referred, we do want to see coming in.
Thank you both. Heather has asked, is this e-trade via your website or in-house actuaries?
So it's both. So we both have access to both the e-trade platforms, Zurich Online and Actuaries Core. So you can, depending on if you have, some people have access to both, but yeah, you can get quotes via both systems.
Perfect, thank you, Desta. Ian has asked, will you consider marine trade risks?
Shall I jump in?
Yeah, go on.
So yes, there is some space there where we will write those risks. In the majority, they are refer trades for us, just so that we can understand the specific activities in more detail. But we have got really clear sort of specific areas where we are comfortable in that space. So yeah, absolutely. If there's things there, they can be referred to us, and we'd be happy to consider.
Thanks, Matt. Next question. Are there certain trades that you will not allow attachment at 2 million?
So, I mean, we're usually happy to attach at 2 million, but it's more about the limit of liability we'll offer on top of that. So if it's something, we're not too we're not something we're too keen on or something like that, we may only offer 3 million on top of that 2 million. We obviously underwrite every case on its own merits, so it would depend on the case details, but it isn't sort of we don't, the trade isn't associated to our attachment point. It's just more around our comfort on the trade as a whole. So again, if we wasn't comfortable on a trade, we might consider attaching at 2 million, but only offering a 3 million limit.
Thanks, Liam. Next question. Does your policy come with its own list of endorsements? And if so, can these be removed to match the primary?
Yeah, so it does come with its own endorsements. And again, we would treat it on its own merit. We're going to have our own red lines in terms of what we do and don't want to write. So again, it depends on what it is we're being asked to remove, but we can consider it.
Thank you, Desta. Question from Richard, who has asked, does it matter who the primary insurer is, apart from when it is Zurich, obviously?
So we do have the approved list of insurers that are in the drop-down list that you're able to select. If they're not, we just ask, because it's written into the policy that it's a UK standard policy wording. So then we would just ask you to confirm that. Sometimes brokers do send over the copy just for sight and for the file. But in the majority of instances, if it is standard UK policy wording, then yeah, we're likely to follow. You have a lot of new insurers entering the market all the time, don't you? So yeah, the list isn't always as up to date as would you like.
Yeah, and the key thing there is it will rarely refer for the primary or underlying insurer unless really there is some Zurich involvement there, either through an MGA or a scheme elsewhere, and that's just to make sure that we're not creating situations where we're too exposed in one specific area.
Brilliant, thank you both. A follow on to one of the questions before, do our products also offer excess layer for professional indemnity liabilities?
So this product doesn't. We would probably need to refer that question to our financial lines team to see if that's something that they can do within the professional indemnity space, unless Heidi, you know any better than me on that one. But no, this is a sort of a general ELPL casualty excess product, but we can take that away and just double check with our financial lines colleagues.
Thanks, Matt. Can Zurich offer attachment at a higher point, i.e. third or fourth layer, if you write the primary?
We can consider that. Again, it'll just depend on the risk type, and you know how far off the ground the excess layer is. Again, it's one we would consider, but we would have to see the risk first.
Thanks, Liam. Next question. How much percentage of heat work would affect the chance of a quote? Say a welder with 90% heat works has 5 million PL and wants a 5 million excess layer to make 10, etc.
So the system. Oh, go on. Go on, Liam.
Yeah, so we don't have sort of a cut-off point of percentage. It will refer into us, and we'd probably just want a bit more risk information. So where's the work being carried out? Is it done out in the open, or is it done inside buildings, and what type of premises are they working at? Is the chance of a large cat claim, or is it something quite light? So it would depend on the risk details, but again, I wouldn't say there's a cut-off point in terms of percentage. It would just mean that it'd take a bit more underwriting the larger the percent.
Perfect. Thank you, Liam. Are there any notification timescales for claims? If a claim is being dealt with on the primary policy and it becomes apparent that it will exceed the SI layer in the claim, then initial notification, will this be an issue?
Oh, that was a lot of information there. Sorry.
Yeah, sorry, I'm reading that one back.
Yeah.
Matt, shall I step in at this point?
So we've got our casualty portfolio underwriting manager here, so yeah, absolutely.
Thank you.
Hi, the excess of loss policy has a reporting condition where if a loss has potential to reach 50% of our attachment point, it has to be noted to Zurich. So it's not the point at which it's reserved, it's the potential. So generally we'd expect it to be a very serious incident, a large fire, a life-threatening injury, multiple bodily injury situation, but we'd expect notification of the incident if it's one of those scenarios.
Perfect. Thank you, Mark.
Thanks,
would you consider following a scheme wording subject to you accepting the wording? From Ian.
Yeah, we would be willing to accept that. I guess we just probably want sight of it, making sure we're quite happy with what we're following. So again, in them scenarios, we probably would ask for a copy of the policy wording, just so we can have a read over that and make sure we're comfortable with it.
Perfect. Thanks, Liam. Are there any issues having the XOL policy dates run at a different time to the primary policy dates?
No issues. I know like instances where the policy to fall in line with the primary, so you always welcome to run it on a shorter period or slightly longer, as long as it doesn't exceed 18 months.
Perfect. Thank you, Desta. I'll swap back to the Q&A box now. Adrian's asked, what about the waste industry? I think that's a follow-up to the trade accept questions that were coming up before.
Yeah, generally waste trades are not within appetite, and that's pretty much the case across most of Zurich's underwriting functions. So whether that's casualty, property, etc., it's engineering, etc., it's an area where we don't currently have appetite.
Thanks, Matt.
Just in terms of trade appetite, what it may be useful for us to do is when we send through further details, I think it's worth us just including a bit more information on some areas where we're not comfortable, and also provide you with some details of where we really would like to write business.
Perfect. Brilliant. Next one, for unusual or complex risks, or where it isn't obvious how we should answer your standard E-Trade questions, how can we provide further information for your consideration?
it's probably in those instances where we would encourage a telephone conversation, or you can actually attach documentation and notes to the system. But it's probably, like I said, best to pick up the phone and we can chat through, and if there's any additional questions then we can just ask them, and then, can't we?
Brilliant, thank you, Deska. Do you exclude high risk areas?
As in high risk areas, as in the London postcodes? Because I think that's the only sort of question that we have, where it's
Heather, if you've got any more detail on that one, just feel free to
high
put another
risk
comment.
areas. Please do. But if it's in terms of like what we would class as the London high risk postcodes, and we don't exclude them, there is a question that is on the question set where we ask if there's more than 100 visitors or employees at any one location. So we would just want to know, well, what is the total number? And if it's a high number, then probably going to want to know if terrorism's included in the primary, and also what life safety evacuation procedures they have in place.
Thanks, Desta. Heather's just put another comment saying location, i.e. chemical industry, nuclear.
So it is excluded in the statement of fact, but again, depending on what they're doing, you can refer it in, and we can potentially consider writing the cover back in, depending on what it is. Again, case by case basis that we can consider that.
Perfect, thank you. I think that is all the questions I can see for now in both the chat and the Q&A box. So just give it another few seconds just in case anybody has got any further questions. But as Matt says, we'll attach some further information to the follow-up email. We can include the marketing materials and a few other bits and pieces to give you some more information. I'm not seeing.
Yeah, just picking up on sort of Mark's just added a comment which follows on from the previous question around sort of question set, or market information. The question set and the risk information that we ask is very much based on standard sort of open market presentation basis. It's the same question set that you would see from other e-trade excess of loss products, and I guess outside of that, we would expect you to clarify, anything else, or get in touch if you did have a question.
Thanks, Matt. Okay, I think that is all the questions for this afternoon. So thank you very much to Desta, Matt, Liam and Mark there for presenting, and thank you very much to everybody for joining. I hope you found that a useful session. It's great to have so many questions. As I said, we'll send around a follow-up with the slides that we've gone through, a copy of the recording and a little bit more information as well. And as the guys said, we're very happy if you want to get in touch with any additional questions and things. I hope everybody has a great rest of the day, and hopefully you'll be able to join another one of our webinars soon. Thanks, everyone.
Thank you.
Thank you. Thanks ever so much.
Thank you.